AMC and GameStop are fun stocks to watch. Short interest is still rising, which is building a lot of excitement around these stocks. Plus, our favorite hedge fund Citadel had to stay up all night over the weekend for some reason, and the AMC utilization rate is near 100%. So there's a lot to be excited about, but this uptrend is taking a lot longer than many of us expected. Strange things are beginning to move in the market, so let's talk about how some of this market activity can relate to GameStop and AMC, and let's get to it. What's up YouTube, James with Thursday Media here, and in this video we're going to be looking at how some of the current market activity could be indicating that the squeeze of AMC is very close. The stars are beginning to align, short interest is steadily rising, and the number of shares left to borrow are practically none. The price of AMC is holding steady, which is a far cry from the bankruptcy hedge funds were hoping for. So why hasn't this stock gone to the moon already? Well, it wouldn't be called diamond hands if the journey were easy. And let's not forget that hedge funds have been throwing everything they can at GameStop and AMC to beat these stocks down. And we've already seen the countless amounts of due diligence posted on the web that demonstrates the many strategies employed to try and shake people out of AMC and GameStop. But now it's the endgame, and we've seen the game too many times. The only thing left is to drag this out and make the squeeze seem like it's never going to happen. I know for many of us this seems like a staring contest because AMC's been trading sideways for so long, but this tactic can't last forever, so don't blink yet. And one strategy that I know we haven't used yet is hitting the like button so that YouTube knows that we're still in the game. Let's go ahead and get the worst part out of the way. Over the last year, the upward momentum and speculative action of the market has gotten new investors and traders alike to get used to fast and easy money. Individual stocks were rising to extraordinary prices in large percentage runs. Some of them deserved, but many were not. Now the market is wobbling a bit, and whoever is holding these massive short positions know they're in a bind, so they're taking advantage of the general market sentiment. They also know that the vast number of AMC shareholders are retail investors and that we can be impatient, especially when we don't know what's going on. But don't fall for this. AMC is getting very established in its current range, and on a technical level, it appears ready to move. I just hate to see that after surviving the onslaught of negative news, the coordinated attacks, and all the strategies to push this down, that the one tactic that gets us is our own impatience. Particularly when interesting things are happening in the market. So this weekend, the web was abuzz with Citadel's building leaving the lights on because either they hate the environment or their employees were working late over the weekend on something. On the same weekend, we saw Bitcoin and the crypto market take a hard dive. It could be theorized that Citadel may have been the cause to gain capital, or that they're pushing to get ready for something big. Then as this week opened, the market seemed like absolute trash as stocks among all sectors pulled back ahead of earnings. This could be due to fear in the market, the new security requirements that went into effect today, or maybe a little bit of squeeze preparation. What if in all of this selling were stocks that had tremendous value, but were sold off big time to raise capital? Sure, fear in the market is always a great time for hedge funds to go full evil and short stocks to make money on the uncertainty. Crypto restabilized and the stock market bounced back a little, so obviously other institutions saw great buying opportunities. It's just a theory, but we probably saw these small market-wide sell-offs as institutions began shoring up capital in preparation for the new rules going into effect and margin calls likely to come down soon. So the chips are falling into place, and the catalyst will be the first fund to step out and trigger the process. So what exactly are we waiting on? Well, many are still speculating that clearinghouses are somehow involved in keeping the prices of AMC and GameStop stable long enough for their policies to be approved by the SEC and put into place. Much of their proposals seem to be structured in such a way that if a mass liquidation of one of its members were to occur, that its other members won't be too heavily disrupted by it. Depending on how the squeeze occurs, AMC and GameStop may both shoot up rapidly and crash just like the first time. Or they may see a sharp but steady rise as investors refuse to sell, and these positions have to be covered at astronomical amounts. When we see images of retail investors setting limit sell orders at $100,000 per share, yes, it's done in jest that day, but that number is very real to some investors and not completely without merit. It's very possible that many shares that you or even I own are basically fake shares, IOUs created through options or naked shorting. Until every share is accounted for and covered, the price will continue to go up to the moon if we allow it. Add on to this the Reddit article A House of Cards dropped yesterday, detailing how the DTCC has been negligent in controlling naked shorting for basically its entire existence, and it just seems like everyone in the elite market class has been okay with this type of behavior until their own rules come back to haunt them. The DTCC is scrambling with a ton of rule changes, some of which we've covered on here, and it's likely to try to form an orderly transition out of this mess and not make itself look like the bad guy. So a lot of the responsibility of negligence gets put on the DTCC. And we can't forget that DTCC was notably absent during the congressional GameStop hearing, so it wasn't even possible to ask them questions at that time about their role and how they were going to respond to this mess. So we are very much into the endgame of this saga. How long do they drag this out? I suspect not very much longer. But as long as they can pay the bills, the hedge funds may try to play the waiting game for as long as possible to shake people's nerves. Diamond hands have probably never been more important because I suspect once DTCC gets their house of cards a bit more in order, the floodgates will open. Now, as far as AMC is concerned, I believe the AMC squeeze will shortly follow the GameStop one. GEMINI has been the face of the movement, and that's where most of the focus is at. But considering the numbers from this point, AMC may have more upside. With positive news likely on the horizon and the summer season around the corner, AMC will likely be posting good recovery numbers and the stock will rise on that news. I imagine hedge funds deep in this will try to get out before that, so we could probably look forward to a pre-summer squeeze. But as always, I am not a financial advisor. I'm just a regular guy with a regular job, just staying patient and hanging in there. So make sure that you always do your own research and that you make financial decisions that you're comfortable with. If you're interested in trying out active investing, I'll leave you some links down in the description below that'll help get you started. Some of these are even offering free stocks when you sign up and make your first deposit. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Thursday and Sunday, unless I throw in a bonus. Set your price targets to the moon, hold with diamond hands, and as always, thanks so much for being here, and I'll see you in the next one.